Let's go live now to the Chair of the Standing Committee on Economics, Labor MP Daniel Mulino. Thanks for your time. Unemployment has ticked up to 3.7%. It shows the rate hikes are biting, doesn't it?
Hi, Kieran. Thanks for having me on this afternoon. Yes, look, I think this was always to be expected, but look, as the Treasurer has indicated, we need to step back and look at this with some perspective. An unemployment number with a 3 in front of it by historical standards is still very low. And what I think is a good sign in terms of the economy tracking on the trajectory that both Treasury and the government, but also that the RBA has been foreshadowing, is that we are seeing inflation track down. We always expected unemployment would track up a little bit, but so far the impacts on unemployment have been very modest, which is good.
They're modest, and you never want to see people lose jobs, but this is the sort of number the RBA does want to see. They want to see an economy that's cooling. And how does it play into their thinking in terms of the June meeting?
Well, I think a whole lot of things are going to factor into their thinking. And look, it goes without saying, I don't want to try and second guess exactly how they're going to structure their analysis with all the various bits of economic data flying around. But clearly, there are a lot of indicators of where the economy's at. So unemployment is one, wages growth is one, retail spending is another, and they'll look at all of those. I think the key factor that they look at is the trajectory of inflation. And so in the last quarterly numbers, we saw inflation come down materially. But even more importantly for me is the fact that we've now seen inflation trending down on a number of monthly reads. So I think they'll look at all the different data sources coming in, but the most important single one is the inflation read. And obviously, to get a soft landing, what you want to achieve is inflation tracking down over the next 12 to 18 months as quickly as we can achieve that with the most minimal impact on unemployment. That's what everybody wants to see. But in terms of what's feeding into the RBA's thinking, I would imagine that inflation is the single most important data point.
The wage growth number this week, there was a boost, and I know it was the biggest number in a decade for wages growth, but it wasn't like it had blown out. Would you still describe that as modest wages growth?
Yeah, I would describe it as pretty modest in the sense that it's still got a 3 in front of it. It's still way below inflation. So there was always going to be a bit of an increase in wages. In fact, we've said all along we were going to strengthen bargaining procedures so as to see an increase in wages growth. We felt they'd been structurally too low for too long. And as you know, in the last election campaign, we fought for an increase in the minimum wage that was higher than that which the government of the day, now the opposition, argued for. They said the whole economy would fall into a heap, which it clearly hasn't. So we wanted to see a modest increase in real wages, in wages, which we've seen, but one which was going to be something that the economy could sustain. We held some public hearings of House Economics today, at which we had received evidence from a number of very prominent economists, and they were very clear that they don't see the level of wages growth that we're seeing at the moment as feeding into inflation, and that's certainly where the government's interpretation is at.